Alrighty, guys, welcome to tonight's charting session. It is Monday, October 30th. Hopefully, everybody is doing well tonight, and hopefully, everybody, if you did trade today, hopefully you traded well. If not, we're gonna go over and review everything that we looked at today. So, starting off, we'll talk about my bias going into the day. I did not plan to trade at all today. I decided I was probably gonna take today off. Because we had FOMC, NFP going into this week. No red folder news day on Monday. Again, I expected to see lower probability conditions. Again, you don't really know what you're going to get until you're actually seeing it in front of your face. So I decided to take the morning and not really watch morning action. I was expecting to see exactly what we talked about yesterday, actually. Last night's charting session, exactly what we were expecting today was to see that exactly what I said I wanted to see, which was in the morning of Monday, see that manipulation move to set us up for the rest of the week. And we had that manipulation move in the morning. We came up, swept this buy side level, which was in this volume imbalance that we were watching on the daily, which was actually this volume imbalance and this fair value gap, actually, which, by the way, this is something that ICT went over. If you ever have a fair value gap and a volume imbalance in the same area, this is how you would mark it. So again, if I was to market fair value gap, it'd be like this. Volume imbalance would be like this. You just overlap the two. So we came up today into this, came up, swept buy side, big displacement of the downside, showing me that we were probably wanting to go hunt these Asian lows. We had a bunch of stacked equal lows right here, which was Asian session low right here. We took London low in the morning, and then we had that pump before taking out buy side. So going into the day, I did have a bearish bias. I wasn't really looking to take any sort of trade in the morning session. My whole goal was to not even look at the morning session and just wait for structure to play out and then look to see if there was maybe anything in the PM. I did end up taking 2 trades today. I am up around 5,000 something on the day. I'm not sure. I went 2 for 2. I took 2 trades. We'll talk about those 2. I alerted them in the Discord for the people that were in the Discord at the time. But we'll talk about those trades and kind of my bias. So one thing I want to go over today and kind of get out of these trades and reviewing this is understanding structure and timing. I know a lot of people that took a similar trade like this today, but ended up either getting stopped out multiple times, or they didn't know, when was the proper entry, when was not the proper entry. And I want to go over tonight the understanding of structure and understanding of displacement, understanding of time-based liquidity runs. So in the morning, we can see we came down. We swept these Asia lows. From here, we had big displacement back up inside this range. Now, in my opinion, I was looking to see us come back to this gap. So the low that we created from the gap, I was looking to see this become kind of not really sell side, but I would want to see us come to this gap. So this is where I was kind of looking for the draw to be. When we came back up, I noticed, again, coming back into this big 15-minute fair value gap, we had a big inverse fair value gap. We had a 5-minute inverse right here. I was expecting, once we came down and swept this, I was expecting to probably come up, reject, and then see lower. But since I was going into today expecting to see consolidation and expecting to not see good action, I was not looking to catch the entire move. I'm looking to catch good entries, and I'm looking to catch decent exits to make a profit and run. I'm not looking to catch home runs. So the first trade that I took was this short. Pretty much, again, everything that I would need to see for this short is, again, bigger time frame bias being lower. We've now come up in the morning. We've swept that buy side level. We have big displacement to the downside. We've now retraced back up into this range. Again, we're starting to accumulate. We actually have kind of a little market structure shift here. Pull back to this imbalance. This was kind of a 2022 model, actually, in the here. We came out, swept sell side, big displacement back up, held that imbalance, and then we retraced again. Why do markets move? Either to hunt buy side, sell side liquidity, retrace to some sort of imbalance, or rebalance to equilibrium. So we came down, swept that sell side level, had displacement back up, rebalanced to the inefficiency. And then from here, I was kind of watching to see what was happening. So let me replay actually kind of where this was at the time and why I took shorts here. So at this point in time, I'm expecting price to go here. I want price to go here. This looks really nice. We've now gotten displacement to the downside. We've had a lot of structure start to form. Now that we're starting to retrace, we've now retraced back to discount of this range. So we've retraced back to discount, and we've now starting to reject this, and we're now having displacement to the downside. So again, this is now an internal model. I have rejection of a bigger time frame imbalance, an internal stop rate at the highs, displacement to the downside, and now I'm looking to take a fair value gap. And what I liked about this setup is we started to accumulate here. This is a perfect market maker buy-sell model, right? Just internally, zoomed in. Again, price is fractal. You will see these models play out time and time again, whatever time frame that you're looking at, right? We have our buy side of the curve, accumulation. This is when we have the accumulation up here. We have that market structure shift here. this is now becomes another part of that market maker sell model, which is more accumulation again. And then what do you expect to see here, right? Now, the draw and what I'm expecting or what I'm looking for my price target in this trade is I'm not looking to see all towards here because I'm not confident. I will leave a runner to here, like one contract, but I'm looking to take 80 to 90% of my position off at this first low because I'm not confident that we're just going to sell off, right? I'm going into the day expecting to not trade, expecting to see choppy action. So when I am taking a trade, I shouldn't expect for my runners or for my, us to just have a smooth move to the drawn liquidity, right? I'm not expecting efficient price today. So enter short, again, what do you expect to see looking at this action here? We're accumulating. We have all these stacked highs here. I'm expecting to see a stop raid and then us to flush. We come up, boom, stop raid, stops out all of these highs here. I then add another extra I think I added 2 extra contracts here because I'm confident, and then I move my stop. So my original stop was up here. I'm risking, I can't remember exactly what my size was on this trade. I think it was I think I traded 4 contracts here. So I think I'm risking like 800 or 1,000 right here. But what I'm doing is basically once I get exactly what I need to see for the internal rejection, which is, hey, we're starting to accumulate, stop raid, boom, we stop raid, and now displacement. I know time and price have now aligned. This is the point in time where I know we are about to sell the fuck off because everything has happened, right? So when reading price action throughout the day, you have to understand why markets move, right? We always talk about this. Now, if I was to look at this, this chart right here, and I was to say that this is a 1 hour or a 15-minute chart, how would you look to trade this, right? This is exactly what we would look to see on any sort of time frame. This is exactly what we would look to see. Hold on, my dog is tweaking. Let me let her out real quick. So imagine this is a 15-minute chart. If we were looking to take any sort of trade here, this is exactly the bias that we would be looking for. Bigger time frame imbalance, buy side being swept, clear manipulation. We're still holding the bigger time frame imbalance. The overall draw on liquidity is still lower to the downside. Now I've gotten displacement to the downside. This is exactly what I would need to see for me to take some sort of short entry. But again, this is zoomed in to a 15-second. Now, I'm not saying you have to do this on a 15-second. I'm just showing price is fractal. So whenever you're looking for opportunity, you will see the models play out on every single time frame. But it's understanding price and it's understanding time. Keep in mind as well, we were in macro. So right when this displacement comes down, I add another 2 contracts to my position, and I then move my stop to this high. So my fill becomes like here. I move my stop to this high. So now I'm risking pretty much the exact same thing. But if we actually sell on here, I'm now making a significantly more amount than I would be if I was just in my extra contract because I have more context and I have more confluence with this trade now. Does that make sense? So what I basically do is to take advantage of confident moves and take advantage of when I have a lot of conviction in something. What I'll do is I'll say, hey, at this point in time right here, or let me go back here. This is a good explanation. What I'll do is I'll basically go to whatever I'm looking to take a short, right? And at this point in time, it's this. So I zoom at the 1 minute and I'm like, hey, this 1 minute looks really good. I think that we're probably going to hold this and sell. I'm going to enter, half my position size or whatever I'm looking, enter here. Set my stop, set my PT. And what I'm going to do is I'm going to zoom in and then look to add the rest of my position when I know that price is ready, right? So I'm watching. Again, I don't know yet. I'm not confident. We could, if we just sell off here, I'm fine with that. If we just sell off, I'm already in a position I'm going to make money on this trade because that's what I'm looking to see, right? Right now, I'm just looking to manage my position. Now, I don't need to, right? Keep that in mind. You do not need to do this, but I'm just saying how I look at the market and how I want to take advantage of moves that I'm confident in. I have my set stop. I notice, hey, we're starting to build these highs here. I know we're going to manipulate this and stop run. Boom. All right. So now what I'm watching for is, hey, are we going to run this imbalance to the upside? Am I going to get stopped here? Or are we going to come up, manipulate these highs here, stop out all these highs, stop rate, and then displace back lower? Because that's exactly what I need to see. Boom. So now I've seen everything I need to see. If I was to look at this again on a 15-minute time frame, this is everything I need to see. When I say wait for structure, this is what I mean. You now have consolidation, manipulation, distribution. Again, all of these models will start to tie in. Every single thing that you look at price will always be the exact same models. Market maker sell model, market maker buy model, power of 3, stop rate, hunt on liquidity. All of these things are the reason that the markets actually move. When you start thinking of it logically in that sense, and you actually get to read these things happen in front of your face live, that is how you will start to build confidence. You won't build confidence just blindly watching the price action, right? That's not what's going to do. You have to the only way you're going to build confidence is if you're watching price action with these ideas already in mind, right? So the next time that you go into the market tomorrow, this entire week, next week, this month, whatever it be, every time that you're looking at the market, visualize these concepts. Say, hey, I'm looking at the market blank right now. If I think about, market maker buy model, market maker sell model, how can I start to correlate to what I'm looking at in price action right now? And again, the more that you start to see these things, it's second nature. It becomes a language. That's all it is. Price action is just another language that you get to read over time and you have experience with it. If I was going to, learn Japanese or Chinese, it's going to take a long time for me to be able to hear it, speak it, and then I'll become fluent once I have, years of experience. It's the exact same thing with trading. The more experience you have, the easier it becomes. So this trade I took, I then averaged into my position, moved my stop to this high because, again, I know everything I need to see in price now where we should sell off here. We should absolutely sell off. We come back and then boom, exactly what I was expecting. We've now had accumulation, manipulation, distribution, and I'm looking to take most of my contracts off at this low. I took off 90% of my contracts right here. Let my runner go to the low that we had at the bottom of the gap, and I was kind of just looking for low of day here. And then we ended up getting stopped out at break even, or I think I actually stopped it in profit. I can't remember if I got stopped at break even or not. I think I took it off like somewhere around here because I was pretty confident I was most likely going to get stopped. Then my last contract got stopped at break even there. I took most of it off right here. So that was the first trade I took today. Any questions on that first trade so far? Do we all understand the confluence behind that? Do you enter on the drop? No. Again, this is your time. Anywhere after this low is taken, I think is a bad entry. Because it skews your risk. Because now you need completely new structure. You need completely new structure now that this low is taken. Is it better on No News Monday you didn't let it run? The only really reason why I didn't let it run is because I told myself I, number one, wasn't probably going to be trading today, and I was expecting lower quality conditions. So because I know that, hey, it's FOMC week, we have NFP, blah, 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 and it's a Monday, and we have no news, I'm going to take what's given to me because I'm not going to be greedy. And you have to control yourself. Going into days or weeks where you think, even if you think, it doesn't matter what it is. Because, again, you're not going to know if you're going to get good or bad action until you look at it. Like, people get upset when I'm like, guys, be cautious going into today. Be cautious, blah, blah, blah. We have this, and this. And then we get good action. They're like, Justin, you said there's going to be bad action today. I said, no. I said, be cautious. I would rather be safe than sorry. If you go into the day just noticing, hey, we have all this news, and then you expect to see good action, and then you get railed, you're going to get hurt really bad from that. Again, that's the difference between building good habits and bad habits. You will not know that you're getting good action, or you will not know if it is probable market conditions until you are actually looking at the market and you can recognize those things, right? So I have no idea if it's going to be bad. That's why I didn't trade the morning. I came into the day, and I let the morning action settle and show me, hey, our market's going to be a little bitch today, or are we actually going to maybe get some opportunity? So I let the morning settle. I come later in the PM, let the first hour or two settle, and then I start to see action start to clean up, and we get good action, and then I feel more comfortable putting money on the table and actually taking some sort of trade. Right? Make sense? What would you say about the 10:10 a.m. fair value gap? I wasn't confident in taking it. I need more structure. Would you take it? 10:10. So I talked to a member, but a member DM'd me this morning and was talking about this entry. This is technically the 2022 model for shorts. If I'm being honest, if I took this trade this morning, I most likely would have missed this setup. And the reason why I think that, and I'm going to be honest with you guys, if I'm looking back, knowing myself and how I trade, I don't think that I would have gotten an entry here because I would have been waiting. I would have been waiting for more. And a lot of the times, again, the reason why I say that is because this is a straight up down move. When it's a straight up down move, I'm not expecting to see a straight up down move, right? I'm expecting to see a stop rate. I'm expecting to see consolidation. I'm expecting to see displacement, which is you kind of what you got. You got your displacement. You got your fair value gap. You got everything you needed to see. I mean, this was the 10 a.m. window for Silver Bullet. But in my opinion, if I was looking at this trade, I would have been more patient, and I probably would have missed this trade, and I wouldn't have been mad about it. I would not be upset if I missed this, because specifically for how I trade, I like to see more structure to validate a confluence. Now, there's ways that you could predict and have conviction that this is now a sell model. Number one, again, you have everything you need to see. I mean, you have buy side swept, rejection of a bigger time frame imbalance. You have this big daily inefficiency. You get displacement back down. The only thing that I was really be watching for is just the bigger time frame imbalance. We have a 15-minute here, and I don't know if this is going to get ran through. I don't know if we're going to hold this. So at this point in time, once this happens, I'm confident that we're going to go sell to the lows. But only right here do I know that we're going to sell off. I'm not confident right here, anywhere before that time, that we're going to continue to sell until we come up. I'm now expecting, again, this is what I talk about, because this is what the first entry would be, right? When we talk about I like taking the second entries, this to me would be the first entry. Now, once this gets rejected, then I have confidence taking some sort of short only after that happens. But that's just personally me. I like to see the first setup get taken and first setup get respected, because the trade after that just becomes so much higher probability statistically for me. So that's why I always take the second setup. No, I don't think this is too early. This is a 2022 model. I think this is a good entry. Just me personally, I would want to see more structure with it, because it is just a straight up-down move. Does that answer your question? Yeah, there was an SMT too. There was an SMT up there too, which would give you more confluence for the sell. Yeah, again, I'm not saying it's a bad. It's a good trade. If you took that trade, it's a good trade. All right, so after this point in time, I pretty much just stepped away from it. I think I went to go get coffee at this point in time. So I took this trade. Again, right now, just waiting. At this point in time, I still want the draw to be lower. I think that we're most likely, again, waiting for structure. Again, zooming back out. Hey, we now have a high here. What do you think this is going to become? If the draw is still lower, we're now coming back up to a bigger time frame imbalance. We have a 5-minute inverse. We have all of these imbalances. We're now slowly working our way back up. We now have a prominent high put into place. I want to see this now become a stop rate to then go to whatever the drawn liquidity is, right? Which is what I'm looking for, is to see new lows or to see whatever that previous low is, blah, 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 blah. So what do I need to see? Stop rate, displacement, imbalance. Waiting. Hey, that's exactly what I need to see. 5-minute has now been created. We now have a 5-minute fair value gap to the downside. We've now come up. We've now stop rated this high. We are now getting displacement. We've now had a market structure shift to the downside. This is exactly what I need to see. And then this is the 1-minute fair value gap where I'm looking, right? This is exactly what I want to see for a trade. Exactly. Notice the amount of structure here that we're playing off of. We have consolidation. We're starting to consolidate. We've now come up, respecting the bigger time frame imbalance. We've stop rated this high. We've now continue. Again, notice I'm not looking to take any shorts here, but boom. Now that we have displacement, now that we've had a break of structure to the downside right here, this is now showing me that time and price have aligned, and I'm now looking to actively take a short position, right? Targeting whatever the bigger time frame draw is. So I'm waiting. This is the one we alerted in the chat. I'm waiting. Boom, I enter short right in this 1-minute fair value gap. And again, I did the exact same thing I did with the first trade. I'm entering with smaller size, looking to see the rejection and to scale into a position. So I zoom back in. I entered pretty much, I think I entered 4. Again, the same thing, 4, and then I'm looking to add 2 more. Stop up here. Again, what am I looking to see here? Just these lows. I'm looking to scale out along the way. Most of the time, when I alerted this in the chat, I said I was mostly looking to take off at this 3-3 area, which was the new week opening gap. But this is the low that I was really looking for. And I'll explain to you why I took most of my contracts off here, which is actually a nice move, but I didn't let them go here. And that has to do with where ES was at the time. We'll bring that up here as well. So let me draw out ES here, and then I'll explain it. Okay. So I'm looking at NQ. I enter short. I'm watching. I'm watching. We get big displacement. Right when we get displacement, I jump in my last 2 contracts, put my stop at break even, and then we end up selling off. Boom. Quick sell off. Happens fast. It's like 0 drawdown on this trade, straight to the area what I want. But notice what happens here. If I'm looking at this chart, I'm like, yo, this looks like we want to sell off, blah, blah, blah. Why do I sell all of my contracts here? I left one runner here. Actually, I didn't even really, I left a runner and then I took it off like right when we bounced from this level. I didn't let it run. Notice where ES is. NQ, what low did we just take? This low. Notice where ES is at this time. This was another question I got in my DM this morning, which was, do you take off your positions when you see a higher low get taken and ES or NQ doesn't take it? And the answer is yes. If it is not in favor of whatever the draw is, you should always, no matter what, be taking at least some position off when we take some sort of liquidity level and there's an SMT. So I recognize ES, nowhere near taking this low. I have no clue if we're going to continue. So it's best to be safe that, hey, this might be our bottom. NQ has taken this internal low. ES is now forming SMT. We absolutely could bounce here. What happens afterwards? We form SMT, don't end up taking that low, and we end up bouncing all the way back. So the reason why, again, I always say focus on defense is defense is a part of offense. When you are playing more defense than offense, your offense will be better in the sense that you will squeeze out more profits. You will time the market more than you would be focusing more on offense. When I come into this trade saying, hey, tight stop on this, I'm going to add position, even trail my stop even more. All right, I'm taking the profit that's given to me. We now have SMT at the low. I'm not focused on catching a home run. I don't care to catch a 100-point move. I don't care to catch a 50, whatever it is. I am noticing and focusing on what the market is going to do. I don't associate with position size. I don't associate with the money I'm putting on the table. All I'm focused on is looking at the market and saying, hey, what is the market most likely going to do right now? And is there an opportunity that I'm confident in with knowing where the market wants to go? That's all it is. And I put money on the table that I'm okay with losing, and I accept the risk, and I don't let emotions sway me. I press buy or press sell, and I follow my plan. And I wait for new data to give me an opportunity to make a decision, right? And the new data in this case is, hey, I don't really know if I'm going to take off all my position size here, but right when I notice NQ comes down here and ES is nowhere near taking this low, I take off my position because I recognize it's better to play defense than offense, especially in this type of week. When we have an SMT, I don't know if we're going to go run this SMT or not. But guess what? I'd rather be safe than sorry than take off my position here, have it reverse on me, and then my whole position gets stopped at break even than, making a couple $1,000s on this trade, right? Which one would you rather have? Miss out on this whole trade completely and get stopped at break even, or miss out on the extra couple $100 you could have made, getting another fucking 13 ticks, right? When you already just caught 50, right? So you can't be greedy. You can't be greedy. You take what's given you, you recognize the data that's being, given to you as well, and you take that into account and you make a decision. And again, a lot of the times making quick decisions like that comes with experience, and it comes with also having that confidence in yourself to trust yourself in that decision making. What took me a lot of time is sometimes things happen so fast especially when you're new, especially when you start trading, lower time frames, is everything happens so fast that you'll be in your price target, you're up a certain amount and then you're down a certain amount. You're like, fuck, I should have taken it there. Or, fuck, I should have blah, 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 blah. When you're constantly thinking that means that you don't already have a plan. You don't know what you're doing. A lot of the times you will enter where you think you should enter, but you don't know where you're taking off. You should not be entering a trade if you do not know where your entry is going to be and where your exit is going to be. And the more confidence you have and the more experience that you start to build with managing positions, seeing positions play out, feeling the emotion throughout a position, and just there's going to come a day when you're going to see a trade, you're going to execute, you're going to have no emotion whatsoever, you're going to follow it to a T, and you're going to be like, damn, that was fucking beautiful. And that's the point where I want you guys to get to, and that's the point where I want you to recognize when I trade in front of you guys and when we trade live and anything that I alert with you guys, whether it is win or loss, you will recognize the experience with how I trade. And I want you guys to get to that point emotionally, strategically, everything. Any questions on that trade? $12.17 fair value gap because we had this breaker. We had this big wick here. What do you think about the London trades? London was clean as fuck today. Let me see. Are you trading Cameron's model? It looks like it with the risk. This doesn't look bad. Again, I would not take this short here though. Again, there's no displacement here, and there's no bigger time frame imbalance or fair value. Maybe there is, but you don't have it drawn out. So regarding the short, how would you know it wouldn't come up to take those relative equal highs? Whenever I see equal highs, I lose confidence in shorting because I've already seen what price needs to do. Again, time and price. This no longer becomes an, again, I'm guessing this is what you're saying up here. This no longer becomes an interest to me once we have this move because I know that we need to take some form of sell side before we come back here, right? Again, markets move back and forth, balance the inefficiencies, hunt buy side, hunt sell side. When we come up and take this buy side level here, and then we have now no reason to go higher, or the hesitation, right? Notice price action. We can't get through this. We're constantly respecting this bigger time frame imbalance. When I see us respect this, and then we just fucking sell off, what do you think the draw becomes internally? Not here. Why would the draw be here? We've now took buy side and now displaced back inside this range. Where do you think the draw is? Some form of sell side. So I'm not worried about us coming back up here until at least some low is taken. So then when we come down and form an SMT after this low has been taken, fuck yeah, do I think that we're going here? Because I've now seen what I need to see in price for this to become a valid draw on liquidity. Does that make sense? Would you say DXY in line with NQ should be in an A+ setup, or would you say it's just more confluence? If you have DXY, then yes, it adds to your conviction. Could you please give this a look? One stop loss, second trade, I scaled in and out. Third for break even. Fourth was a quick scalp into open. Personally, I don't know personally, I don't even know how I feel about them myself. Well, number one, I'm going to say this. Before I even look at the fucking trades that you tell me, if you say to yourself, hey, I don't even know how I feel about these trades, then you shouldn't be fucking taking them. This first one right here, you should not be shorting to go here. If you are taking a short position here, your main PT should be the newest low that you have because that's all the bias from this specific entry that you have. The only bias and the only reasoning that you're taking the short here is to go see the lowest low that was created in this move down. You have no conviction that we're going here because there's no structure on a bigger time frame. This short is fine. Once this gets ran through, you trade the inverse. That's fine. Probably would not have taken the probably would not have taken this short. I mean, I need to see more structure. I can't. It's hard to tell, but based on this, if it's a scalp, I would kind of want to zoom in and see what you were looking at here. But I probably most likely wouldn't trade this. And then this long is not bad. I like this. 2 to 2.5. You're rejecting stop rate, displacement, fair value gap. I like that you use standard deviation here. We respect it, sweep it, bounce. Again, where do you expect price to go after holding that equilibrium that you targeted in that high? So that was nice. Think about this trade again. Yeah, this is the silver bullet today, so that was fine. I'm going for 150K combine with Top Step. What do you think I should risk per trade? I always recommend. I personally trade evals more aggressively, so it's up to you to decide whether you want to do that or not. So I normally risk 800 to around 800 on an eval per trade. Very similar to the trade I showed yesterday. Yep, again, same trade that I took. Again, this is great. This is pretty much the exact same trade. Again, TP1, TP2, that's fine. That's great. You have your first TP, you have your second TP. If you get stopped at break even, you get stopped at break even. Again, building good habits. This is a fantastic trade. One minute time frame, entry off 5 minute fair value gap. 5 minute. Looking for the 1 minute. Yeah, this looks. I mean, you're trading trend here. You have good risk. You have good R. So this looks fine. When was this? When did you take this trade? Who posted this? Mile better mile. When was this? 214. I want to see where this is. Oh, this was way later in the day. Hold on. Okay, so that's where you took it. Okay. Let me clear this up here. Okay. I get where your head's at with this, but the reason I would not take any short here is because... Actually, wait, let me... Hold on. So you took... I'm trying to figure out where your head was at when you took this. All right. I get why you took this trade. And if I'm being honest, this is not a bad entry, but this is a perfect example of why I don't take the first entry. Now, for me to look for a trade here, I get your bias. I get why you're short here. You have these equal highs set up. You're starting to get displacement back down. But this is the first entry you would take. This is the first possible short that you have here. I wait. I would wait. And the reason is because the reason I always say I wait for the second entry is because I need confluence. If you keep always trying to take the first entry and trying to get the best risk reward possible, like you're trying to catch this move, right? It's going to be hard to time that. So when I wait for the second entry, I'm catching the market maker sell model, which is basically this. Hey, if we come up this, and this does actually become market structure shift, then we come up here, get that rejection. Now I have validation that we're in a market maker sell model. So then what do I wait for? The exact same thing I'm looking for here, which is consolidation, stop raid, displacement, and then look to see lower, right? That's just a part of the market maker sell model. I'm trying to catch a position here, not here. I'm trying to catch it once we're already validated that we have a market maker sell model. Does that make sense? So again, too early. Wait for the second entry. I guarantee you, if you focus on taking the second entry instead of the first one, you will see your win rate skyrocket. Took this after open this morning on NQ 50-second. How does it look to you? Yeah, I like this. This is a nice scalp. I like this. I like that you, again, sell size now swept, new day opening gap. You have the imbalance still holding. What I like about this too is once all of these imbalances get ran through, you're confident that this becomes the high, right? This is a very similar trade that we took, I think, last week. Very similar, which is we had that sell off in the morning, and then that whole move gets ran through, and then that gives you confidence that we're most likely going to the high. So this is a nice scalp. I like this. Yeah, that looks good. Again, this trade, a lot of you guys took this. This is the 2022 model. If you took this looks fine. Why was the NQ trade you showed us not considered a first entry? Because the first entry is up here. Again, same structure-wise. I don't know that this is going to hold until we get the displacement back down. This is the second entry. Again, market maker sell model. If I'm going to draw this in, let me zoom in here. Again, the first entry up here would be this imbalance if you're looking to take that, right? I don't know this is going to hold. We actually didn't even come back to this. But once I get this displacement back down, then I have confidence, right? On this trade here, there's no displacement back down inside this range. And again, this is the stop rate here. Something I like to keep in mind is don't take a trade unless you get back inside of the range. take note on this. This is actually a hack. This is something that I do, and I don't really kind of realize. I guess I do realize that, but I will not be confident with the draw, or I will not be confident in a sweep of liquidity or look to what I target if we don't displace back inside the original range of whatever the stop hunt was. So I'm looking at, again, if I zoom back into the 5-minute, I'm looking at these highs, right? I'm looking at these highs to be my buy side or my stop rate. I need displacement back inside under this level. Under this level, I need displacement. Do we get that on that trade? No. The displacement that we had was still above this level. So anything above here, I'm not looking to take a short, which is what I mean by first entry. Make sense? Yeah. Start thinking about it like that, because that's how I think about it. Is I want to, again, anything that's above this is lower probability. I've noticed that the losses that I take are the losses when I try to predict that we're now switching over to a sell side model. I don't try to predict it anymore. Wait for the sell side model to play out. Watch the first entry, see it play out, and then look for a trade. Once you have confidence with that and you now have confidence in the model. What do you think about this? Long TP was equilibrium, 15-minute inverse entry was 10:51. Yeah, I like, this is not bad. This is not bad. Again, I would not look to blindly long this fair value gap though, but I would look to take it once we get displacement. And again, that would save you a lot from possibly even getting stopped out on that, because we did kind of run it. I mean, if you put your stop down here, then you'd be fine. But you might have gotten ticked right here, actually, if you would. But if I was looking to take a long here, I would be waiting for this to hold. So again, I would zoom in and then wait for the displacement back up. And I probably wouldn't even get my entry until like up here. So I guess it's the same fill. It's just time-based again. So I guess it would be the same thing, but actually it wouldn't be the same thing because the risk would be different. But all right. Wait, hey Justin, can briefly go over a perfect setup for maybe looking back at past trades? Like, what would you consider a setup? Okay, so a setup again. I always say this. Whoever actually, does anybody have the screenshot? I know somebody has the screenshot of the list. Can you just type that in there? Thank you. Yeah. Screenshot this. This is basically what I will always say. This is my go-to model. Have confident draw on liquidity. Have some sort of bigger time frame draw on liquidity. Recognize the model. Look for a bigger time frame imbalance. Wait for the rejection of that imbalance. Zoom in. Look for internal model targeting the draw. Stop rate, displacement, directional draw. Take fair value gap for your entry targeting internal draw, and let the runners go to the external draw. The sessions indicator I use is ICT pivots and kill zones. ICT pivots plus kill zones. Or kill zones plus pivots. All right, so let's talk about kind of what we're looking at going. Let me clear the chart here. We'll talk about what we're looking at going into tomorrow. I don't know why this. Let me redraw this in because the weekly opening gap ended up getting deleted. All right. So bias going into the tomorrow is still going to be the same bias that I'm looking for that we talked about last night. Still bearish going into the day. We are in a BPR, or not a BPR, sorry. We're in a volume imbalance. We are in a fair value gap. Not only are we, again, this is what ICT talked about today, actually, which is we have a daily fair value gap here and a daily volume imbalance overlapped. So now we've now taken buy side liquidity. I'm looking for displacement back down to see us continue to sell off and continue this market maker sell model, again, going to this lower time frame imbalance. The only time where I'm might going to start potentially switching my bias to bullish is if this fair value gap gets ran through. So I'm still fine. If we can still go higher, I would like to see this continue to hold though. But we could still go higher and go into this 4-hour imbalance, but I would really like to see this hold and continue to see lower. So depending on what happens tomorrow, again, keep in mind, we're having still bullish order. Actually, let me get rid of the replay. I don't know where we're at right now. We're starting to sell back off. Did we form an SMT right here or no? So we have bigger time frame SMT right here. And we formed this SMT. This is what I was looking for here. So I'm looking for this to hold. I'm looking for these SMTs to play out. I'm looking for displacement back inside this range and continuing to look for the draw being lower. So again, exactly like we were looking for last week, I'm expecting the same thing. Manipulation on Monday. Probably the start of the move on Tuesday, if not maybe a consolidation, and then the start of the move in the PM. And then Wednesday, Thursday, Friday, continuation lower. I mean, actually, again, it depends what it depends on an FOMC. It really depends on FOMC. So who knows? Yeah. Let me double check news real quick. Yeah, we have consumer confidence at 10. Probably will be waiting for 10. Most likely won't take a trade beforehand. If I do take a trade beforehand, it most likely needs to be a really good setup. So we'll see. All right. Any last questions? I think that's pretty much all I have for you guys tonight. NQ 1 minute for Vike up at 10:10 again. Too early for you? Yeah, I waited for the second entry, which is I wait for the model to start playing out, wait for the first entry to get respected, show that the trade's now playing out in my favor, and then I look for the second entry. CL? We can look at CL. Oh. CL looks like we kind of want to sell off. CL looks like we kind of want to sell off to this new low. Again, I don't like trading CL at all because I hate the price action. It's very teasy. Very teasy. So I wouldn't be surprised if we sweep this and then run this imbalance. So what I would be waiting for on CL is I'm pretty bullish on CL if we run this imbalance. I do think that the draw on liquidity is probably going to be this low, but if we come down, sweep this, and we run this imbalance, then we'll most likely go back to that daily imbalance, which is here. So the two things that I'm looking for is either, this is what I would expect on CL, either this holds, we continue lower, or internal sell side swept, this gets ran through inverse, pump up, daily imbalance, then sell off. How much would you risk per day on a 100K combine? Again, it's not a per day thing. It's a per. I don't know the opportunity that I'm going to get per day. I have no idea what that's going to be. But I guess you're saying per day as in my max loss per day. What's your drawdown for a 100K combine? 3K. Your max loss for the day, like you should step away after 1K. Again, I'm aggressive with it. Do I think you should trade an account like this? No, but I think evals, yes. Do you prefer the second entry more on the seconds chart? On any chart. Again, its price is fractal. It doesn't matter. Yes, David, I said the 10-10 is fine. That's the silver bullet. How do you personally go about withdrawing profits? I mean, I trade cash, so I just withdraw through my broker. I don't have to wait for a prop firm. I trade my own money, so. All right, guys, that is pretty much all I have for you guys tonight. Enjoy the rest of your night. Get some rest. If you guys have any further questions, again, always feel free to just at me in the trading chat or the questions channel in the Discord, and I'll help you guys. But enjoy the rest of your night, guys. I will see you all tomorrow morning. Let's keep the week going. We started off Monday pretty nicely, whoever took those trades in the chat. So enjoy the rest of your night. I will see you all tomorrow morning. Peace.